Welcome to the Tesla Updates YouTube channel. In today's video, we will talk about the recent Cathie Wood announcement about Tesla stock. We released a video where we explain why Tesla stock will keep going up, so if you missed the video, make sure you click the first link on the description to see what it's about. These are the topics that we will cover in this video. First, we will explain why Cathie Wood is more bullish on Tesla than ever before. A leading analyst suggests waiting to sell Tesla stock after its 58% year-to-date gains. When compared to the same month in 2022, Tesla's sales in Germany during the month of January increased by more than 900%. This and more topics will be covered in today's video, so make sure you watch the video until the end. Do not forget to like the video, subscribe and comment on what you think about Tesla stocks. With no more excuses, let's get started. Cathie Wood, CEO of ARK Invest, believes Tesla will increase 5 times over the next 5 years. When it comes to making positive projections about the electric vehicle manufacturer, Cathie Wood of ARK Invest is far and away one of the few bulls who can compete with her. In addition, Wood mentioned in her most recent comments that her faith in Tesla is just as great as it was before. According to an estimate provided by Cathie Wood, the value of Tesla shares might climb by a factor of 5 over the next 5 years, and that's only considering the company's operations related to electric vehicles. The founder and chief executive officer of ARK Invest pointed out that the rise of Tesla shares might be closer to 13 times in the next 5 years if Tesla is successful with its attempts to implement autonomous driving. It might come from electric vehicles by themselves. Over the next 5 years, there will be a rise in this stock that is nearly equivalent to a 5-fold increase. And if you believe in autonomy in any way, shape, or form, it increases by a factor of 13 over the next 5 years. According to Wood, hence, we are more optimistic about Tesla than we have ever been. Wood has always had faith in the potential of game-changing technology. She had also predicted in the past that there would be a significant movement toward electric vehicles, with a projected sale of 60 million EVs within the next 5 years. The chief executive officer of ARK, who is also one of Tesla's most ardent advocates, believes that the electric vehicle manufacturer's shares might reach over $1,500 by the year 2026, after adjusting for stock splits. The electric vehicle manufacturer Tesla had a challenging 2022, with the company's stock experiencing a precipitous 65% decrease. This was due to difficulties in China as well as noise from CEO Elon Musk's contentious takeover of Twitter. The fact that car delivery forecasts for the fourth quarter were not met was another factor that investors found unsatisfactory. However, since the beginning of the year, Tesla has implemented a more aggressive sales approach. As part of this strategy, the company has decreased pricing across the board to make its vehicles more competitive. Such a tactic may work in Wood's favor. Tesla will have a highly competitive pricing strategy. Tesla can pay for it. It offers the most competitive pricing structure, in our opinion, and is the most forward-thinking in terms of innovation. There will be competition from the other automakers. They are required to follow those price decreases, even though doing so may cause severe damage to the margins upon which they rely for profitability, as stated by Wood. As we can see, the ARK investment chief is still bullish on Tesla. Do you believe in Cathie Wood prediction? Comment down what you think. After a jury declared Tesla CEO Elon Musk not responsible on Friday in a class action shareholder lawsuit over his 2018 funding-secured tweets, a leading analyst increased his price objective for Tesla stock on Monday. On Monday, Tesla share prices went up. Woodbush analyst Daniel Ives, who has been bullish on Tesla for a long time, raised his price objective for Tesla stock to $225, up from $200, which is around 18% higher than where shares finished trading on Friday. In addition, Ives continued to provide an outperform rating to the shares. The decision to raise his price target was made after Tesla stock increased by 58% over the year and is currently seeing a 91% run ever since it hit bear market lows of 101.81 on January 6. Ives noted that while the macro remains uncertain and a recession might likely be on the brink, Tesla is now positioned nicely with its price points and that demand has been outstripping supply so far in 2023. Daniel Ives believes in Tesla, and if you see the recent movement of Tesla investors, you will notice that everyone is buying more shares. During the market session on Monday, Tesla shares increased by 2.5%, reaching a price of $194.70. On Friday, Tsla share prices increased by around 1%, reaching $189.98. After deliberating for 5 days, a jury decided on Friday that Elon Musk did not cause investors to lose billions of dollars when he tweeted in August 2018 that he was considering taking Tesla private. As a result, the actions taken on Monday came as a direct result of this verdict. During that time, Musk tweeted that he was considering taking Tesla private for $420 per share. The CEO of Tesla also mentioned the phrase financing secured. Despite this, Musk's counsel stated in a federal court in San Francisco that his client didn't think at the time and at that moment he didn't care about the lack of guaranteed money. Following the ruling of the court, Musk sent out a tweet saying, "Thank goodness, the wisdom of the people has prevailed. I am deeply appreciative of the jury's unanimous finding of innocence in the Tesla 420 take-private case," he wrote. On January 6, Tesla lowered the price of the Model 3 and the Model Y in China by as much as 13%, bringing the base Model 3 down to $33,570. The electric vehicle industry leaders slashed prices across Asia on that day, with further reductions in Korea on February 3. On January 26, Musk informed investors that January was the strongest orders year-to-date than ever before in our history for Tesla. Demand is nearly twice the rate of manufacturing, Musk said. Reuters reports that in February and March, Tesla intends to produce an average of approximately 20,000 vehicles per week at its Shanghai plant. The firm projects that monthly output will stabilize around the 82,000 car level it reached in September. In the month of January 2023, sales for Tesla in Germany show an increase of more than 900% compared to January 2022. When compared to the same month in 2022, Tesla's sales in Germany for the month of January climbed by more than 900%. The first month of this year demonstrated that Tesla still has a significant amount of opportunity for growth as a brand, even though the company has continuously seen sales growth in Germany since it entered the market, and certainly at a decent pace. The fact that Tesla sales skyrocketed by 912.2% in February 2022 in comparison to January 2022 is just the beginning of the good news. In January 2017, while waiting for government authorization to commence manufacturing, Tesla had no operating vehicle production site in Germany. Due to the delay in getting Giga Berlin certified, Tesla vehicles for the European market were transported from the Shanghai Gigafactory. Sales were relatively steady compared to prior months, which is ironic given how far Tesla has come in a year. In Germany, where the KBA is responsible for keeping tabs on registered vehicles, Tesla reported 4,241 sales in the first month of the year, an increase of more than 900% over the same month in 2022. During January, Tesla accounted for 2.4% of the global automobile market, as reported by the KBA. Tesla is meeting customer demand with a production rate of 3,000 Model Ys per week at Giga Berlin. Since the manufacturer is now eligible for the complete incentive program in Germany, sales are expected to rise steadily for the rest of the year. In the future months and years, Tesla's sales volume will undoubtedly increase as the company expands its production capacity in Germany and, ideally, continues to lower prices. Although Tesla's sales throughout the month may not be representative of the electric car market as a whole, they do demonstrate that interest in EVs is still strong despite the economic uncertainty of the present moment. According to the recent announcement of top analysts, and according to the recent Tesla stock graphic movement, we can see that Tesla shares are moving forward to the $200 per share target. What is your price target for Tesla stock? Do you believe that Tesla stock will reach $200 in February? Comment down below your prediction. Thanks for watching the video until here. Do not forget to like the video and subscribe for more Tesla stock content.